What's going on, believers? Happy Tuesday. Hope you enjoyed the holiday yesterday. Have another live price commentary for you today of my New York session model on the E-mini S&P using the US dollar index chart for Confluence. Just take a minute to read through this brief disclaimer here. We'll get right to it. I've already discussed some of these things in the market review and outlook that I posted yesterday, but just to go over the most important factors. So there's high impact news coming to the marketplace here in about 35 minutes. So it's 8:24 Central Time. The report comes out at 9 a.m. Central Time. Get a little brief look at it. Like I said, it's not really too much concern to me what details are in here, smoke and mirrors. It's just about the potential for volatility and for the market to move with some emphasis or some urgency, I mean, towards specific levels that I'm watching. And now getting into the chart. So the dollar chart, we began the week here. This candle here, the yellow line is not seen because this new week range here, another tool from ICT that I've learned, the new week opening gap. So that gap in between where last week closed, this week opened. So I've also took the time to have that marked up here. Prices literally just consolidating around it, but with increased volatility. So this last push above and below got a little bit volatile, traded through the volume imbalance here and above this candle's high, and has since dropped rather quickly into this range, which is a new day opening gap. So I've talked about how sometimes the the changeover that happens between just typically for the U.S. stock indices, it's at 4 p.m. Central and it opens back up at 5. But for the dollar index, it actually closes at 6 and then reopens at 7:30. And so that's this gap here, or is it just closes at? Let me go to the smaller time frame because I was using the New York local time, Eastern time before. So let me just confirm that what it is for Central Time. So it closes. Okay, so it closes at 5:15 and reopens at 6:45. So there's an hour and a half gap for the dollar index. And so that these purple lines here are from the Wednesday into Thursday last week. That gap, the reason I left it was because Friday traded down into it, ran higher into that volume imbalance, taking out Thursday's high. And so now with us consolidating around this week's new week opening gap, it's traded down there and rejected again. Got a bullish engulfing here on the hourly. So I'm not really confident in doing anything until I see this possibly reach back up towards the weekly opening price and that new week opening gap, just showing there may be a potential to continue consolidating around it or to get one sort of a retest, if you will, show unwillingness to trade back above it and then come back down. And I would be anticipating it to either stay in a range between those levels or to possibly trade below this level and reach for some of the inefficiencies here that were left from last week. And so that's just kind of what I'm thinking right now. I still don't have much of a bias, even considering, well, especially considering what I'm seeing here in the dollar. It's not really giving me any clear one-sided direction. It's definitely been consolidating on these levels. Just the ranges have been expanding. That's all. And then this is just, of course, on the right side, you see the daily chart. Now getting into the S&P. So levels I'm watching, this orange one down here, 42.19 and a half. My sell side is below all of these lows. These are relative equal lows. This is all from this week started here. So you can see that yellow line is attached, anchored to this opening price. So ultimately, opened with a gap higher, traded lower, and consolidated. And then overnight, last night, we've pushed up into the high end of the range without taking it out. And got my yellow shaded area. Want to see what pops off at 8:30. That's when the equities open. That's in just a minute here. And like I said, at 9 o'clock, there's a high impact news driver coming into the marketplace. And then this high here, I've spoken about already as well, but just to give it to you, old high from the year. So this is the yearly high currently, this high here. And so that's technically going to be my buy side for today. And then my sell side is essentially this orange line, but really it's the lows here. All of these relative equal lows in here. I won't put a line down there though because the orange line is there. And once it gets down within that area, I'll kind of know, well, I know what I'm looking for me to feel like I see a high probability setup that's worth me engaging. And so here we go. So we got the 8:30 there, and I'm just going to do the typical. I've already now just explained everything. I'll mute my mic and then I'll type anything else that I see of importance. All right, so the 8:30 opening did provide some volatility to the market. You can see on the 15-minute chart here from the open, the S&P rallied higher and then quickly rejected and printed a low. And so the anatomy of a candlestick has four components. There's an opening price, which is the beginning of every candlestick. Then there is a high and a low. And then upon expiration of the time interval of the particular candlestick, that's where the close comes into play. And so for this candle that is being shown now in the 15-minute, it's opened, it printed a high, it printed a low, and then the close will be determined once the time expires. And so that's why a lot of times I prefer to wait until the close to get the full story, because you'll see oftentimes, well, what I've seen oftentimes is things like this where it'll go higher, then lower, then higher, then lower, and it can essentially send me off. You ever heard that phrase before? I don't want to get sent off by price, so it's best to wait for a close. The way to remedy that for me is to go to a smaller time frame and watch those closing prices and see if they provide some sort of a story that I can utilize. But the key levels, typically, unless I'm just doing an intraday scalp, are always for me going to be from the higher time frame, like weekly, daily, mostly, and then intermediate term. I'll kind of look at like the hourly chart, maybe the 15-minute, and then like short term, 5 minute and below. So that's very true right there. I'm not perfect, far from it, but I do work very hard every day on my skill set, and the proof is 100% in the progress. This is like my 40 something video. I was only supposed to do about 50 or so for the whole year. I'm on track to do about 100, to double what I was anticipating, but that's just because once I finally established rules of engagement for myself and a time window in which it makes the most sense for me to try to look for opportunities, then my confidence shot through the roof. And I love sharing. I love empowering and adding value to other people. So I figured, why not? Other people did this in a sense, and that got me inspired to work very hard at this, to believe in myself, to be able to do this. And so here we are today. But so with that note right there, and it's not too fast today. I know that you'll be able to read all of the notes, anyone watching. But I wanted to see a gap left between that candle's low and the current candle on the 15 minutes high, and that would have been an area inefficiency that I could have used to engage for a sell down to that orange line, which is where the sell side for my New York session model exists today. So that white line there on the 5 minute was that low. It traded above that level and then immediately rejected, and it is what it is, right? I have my rules. I have my particular entry tools that I like to use. That's not one of them. So there was no trade there for me. But as you can see, with just a little bit of time here before the 9 a.m. news, about 5 minutes or so, already lots of volatility towards the downside, reaching down towards that sell side on E-mini S&P, and dollar chart had barely moved. And so I've said before, the dollar can consolidate and allow for the US stock indices to run for the buy side or the sell side that is on their agenda for the session, for the day, for the week, whatever it may be, whatever time interval. And so at that point, to me, there wasn't really much to type, right? I'm just keeping track of time. I'm pretty much having an understanding at this point that I won't be taking a trade today, not even a paper trade. Sometimes it's just not worth it. There's a new month will begin on Thursday. There's NFP Friday, and then next week I believe there's federal funds rate decisions being made. So no reason to feel like I need to do anything today. I'm in good shape. And so there's that plunge down into the sell side. And what I do next here is simply just going through the smaller time frames, the 4 minute, 3 minute, 2 minute, and 1 minute, to identify any potential using my rules to have engaged with this price run down there. It had already pretty much left as far as like from the range from the high of the yellow shaded area to the orange line. If I was to measure that and look for the halfway point, it was already below the halfway point of that range. So for me, it just really wasn't worth it for me to engage that. And so there were opportunities, but just not for me. So shout out to believers. Thanks for watching. I'll catch you on the next one. Peace.